Hello and welcome to Finance 101.
Today's topic is the impact of inflation on your finances.
Inflation is a topic that affects everyone, yet many people don't fully understand how it works. In this video, we will be exploring what inflation is, how it affects the value of your money, and strategies for protecting your finances against inflation. Firstly, let's start with the definition of inflation. Inflation is the rate at which the general level of prices for goods and services is rising, and, consequently, the purchasing power of currency is falling. When inflation occurs, the same amount of money can buy fewer goods and services than before. It is important to note that inflation is a normal part of the economy and is usually measured by the Consumer Price Index, CPI, which measures the change in prices of a basket of goods and services consumed by households. Now, let's dive deeper into how inflation affects your finances. One of the main impacts of inflation is that it reduces the purchasing power of your money over time. For instance, if you had $100 10 years ago and the inflation rate was 2% per year, then that $100 would be worth only around $82. In other words, inflation has reduced the value of your money by 18% over 10 years. This can have a significant impact on your finances, especially if you're saving for the long term, such as retirement. But how does inflation affect specific areas of your finances? Well, firstly, inflation can impact your wages. When inflation occurs, it can lead to a rise in the cost of living, which can prompt employers to increase wages to keep up with inflation. However, this isn't always the case, and sometimes, wages fail to keep up with inflation, which can lead to a reduction in your real earnings. Secondly, inflation can affect your investments. When inflation occurs, the value of your investments can decrease. For instance, if you invested $100 in a stock 10 years ago, and the inflation rate was 2% per year, then that $100 would be worth only around $82 today. This means that if the value of the stock didn't increase by more than 18% over the past 10 years, then you would have lost money in real terms. So, what can you do to protect your finances against inflation? One strategy is to invest in assets that tend to rise in value along with inflation. These include assets such as stocks, real estate, and commodities. Stocks, for example, have historically outperformed inflation over the long term, providing returns above the rate of inflation. However, it's important to note that investing in stocks involves risk, and it's crucial to do your research and diversify your investments. Another strategy is to invest in Treasury Inflation-Protected Securities, TIPS. TIPS are bonds issued by the U.S. Treasury that are indexed to inflation, meaning that their principal value increases with inflation. This means that if inflation goes up, the value of your investment in TIPS also goes up. TIPS are considered a low-risk investment because they are backed by the U.S. government. A third strategy for protecting your finances against inflation is to invest in gold or other precious metals. Gold has been considered a hedge against inflation for centuries because it tends to maintain its value during times of economic uncertainty. While gold prices can be volatile in the short term, they have historically held their value over the long term. It's also important to note that you can protect your finances against inflation by adjusting your spending habits. For instance, you can look for ways to reduce your expenses by shopping for bargains, cutting back on non-essential items, and negotiating better deals with service providers. In conclusion, inflation can have a significant impact on your finances, reducing the value of your money over time and affecting various areas such as wages and investments. However, there are strategies that you can use to protect your finances against inflation. These include investing in assets that tend to rise in value along with inflation, such as stocks, real estate, and commodities, as well as investing in Treasury Inflation-Protected Securities, TIPS, or gold. Additionally, adjusting your spending habits and finding ways to reduce expenses can also help protect your finances against inflation. It's important to keep in mind that inflation is a normal part of the economy and cannot be avoided entirely. However, by understanding how inflation works and implementing these strategies, you can minimize its impact on your finances and achieve long-term financial stability. So, take the time to review your finances and consider what steps you can take to protect yourself against inflation. By doing so, you'll be well on your way to achieving your financial goals and securing your financial future.